Good evening, viewers. Thank you very much for joining us today in a live stream. Today, we are hosting a second episode of Accountancy as a Career or Introduction to Accountancy. Before I start our regular show tonight, the live stream, I would say, I would like to discuss a couple of things which are very important here for me, as a matter of fact, as being a father of a child there. As you might be aware, if you are in United Kingdom and Ireland, that the A-level result or a living set results were announced a while ago there, a couple of weeks ago, and then for the living cert in Ireland a couple of days ago. And the students were expecting good grades, including my daughter, who has been studying in a private institute of education in Dublin, Ireland, there. And the results were not as per their expectations. So I was being a trainer and into the education field for the number of years there. I did a little bit of a research there. I found her very disturbing in last couple of days there, because the marks or the grades she was looking to get were not achieved by her. The reason, of course, as we know, that there were no physical examination, whether of a A level or whether of a living cert this year, and it was all result compiled by the tutors, and then or the past performance in the mock exam, and there were other factors involved, and it was a cumulative result there. And then it happened very quickly that the whole formula was not very evident or prominent there, in the way that the student didn't knew what to expect. And a day before announcing the result, especially I'm talking about the living cert in Ireland, and it was indicated by the minister for the fact that 17% of the grade were downsized. I don't know what was the reason behind it, why they were downsized for a couple of percentage of the students there. Anyhow, she got first choice there in the law there. I'm quite happy with that. But just wanted to share a thought about it, that this pandemic at itself has created a lot of uncertainty, especially in the mind of the young students there, who are going to start their university lives or their undergraduate life or postgraduate life, either case, whatever it would be. There's a lot of uncertainty. We'll take a couple of 30 seconds of a quick commercial, and then I'll come back there, and we have our instructor Rahat Kazmi in the studio, who will be going through the principle of accounting, which is the part 2 of 3-part series there. I will be back there in just a small commercial break there. Okay, welcome back. Let's start our regular live stream there with Rahat Kazmi. In my episode 1, I introduced him already, and he went through a good number of slides there. If you haven't watched it, I will share the link of this YouTube as well as the Facebook Live there. Welcome to the stream, Rahat Sahab. A very warm welcome.
Thank you, Dr. Steve. Thank you very much for welcoming, and hello, everyone. I hope you enjoyed the last video, and today we'll go into part 2. Just want to give a little brief to see what we did last week. Last week, we basically talked about accounting, what accounting was, what kind of types of accounting were. So we discussed last week accounting, we discussed bookkeeping, and number 2, we discussed financial accounting. So today we'll be talking about financial accounting and income tax accounting. These are basically the notes number 3 and 4 in part 2. So I just want to get my screen on, if I can.
Yeah, hold on.
1 second.
You have, did you send me that? I have to.
No, I think I can select the thing myself. No?
Okay, go
ahead. Let's see. Okay, let me put this back into where. Okay. Could you please get the screen there, no?
Yeah.
Okay. Could I start?
Yeah, just give me 1 second.
Sure.
Let me organize in a way that it's, yes, go ahead, please.
Excellent. Okay. Okay, so episode 2, guys, and first of all, number 3, as I said, last week we talked about bookkeeping. Number 2 was financial accounting, and today we'll talk about managerial accounting. Last week we discussed slightly what managerial accounting was, and this was basically information which we prepare only for insiders, people who are inside the company. Managerial accounting and financial accounting and income tax accounting, they're all 3 different sets of accounting, but they're all based on one single platform of bookkeeping. So bookkeeping is the first step where we collect data, we organize the data, and then this data is organized and distributed into financial accounting or managerial accounting. So if someone who didn't attend last week's session, so managerial accounting financial accounting was, for example, information which you prepare and share with people on outside the company. These would be investors, these would be shareholders, or other general people who have some influence or some sort of interest in the company. Managerial accounting basically was data which is raw data. It's very detailed. It's not in a summary as we had the financial accounting data. So this is also very secretive. When we think about managerial accounting, we should think about a few things. First of all, it's inside, and it's detailed. Then it's secretive. It's secretive in such a way that it's not shared with everyone, even inside the company. It's on need-to-know basis. Because, for example, let's say one person is doing payroll. The payroll officer or payroll manager will not be able to share the wages people get, the salaries people get to every colleague he has. It can only be shared with head of department or maybe the GM or the CFO, CEO. They can see what everyone gets. They can sign because they have to sign it off. So this information will be very, very confidential. So managerial accounting is prepared in detail. It's intensive. It's used on daily basis. Every single day we use managerial accounts to make decisions. So basically, managerial accounting can help us make decisions in business. For example, if we are running a car sale company, we have a car garage. So from managerial accounting reports, we can see exactly which cars are selling more because we can see the sales going up and down. We can make a decision from there. Should we sell sports cars? Or should we go into family cars? Or should we sell cars which are first-time buyers, small cars, small engine cars? Which cars are selling more? Or if we're running an ice cream factory or ice cream shop, from ice cream shop figures of sales we get, we can see exactly which ice creams have sold more. Should we be selling more strawberry ice cream or vanilla ice cream? This will help. If our office or business has multiple regions, so we can say which region is more profitable. If one region is busy, really busy, and other regions are in demand, so we can open maybe another office in Leeds or Birmingham, or maybe in Glasgow in Scotland. So this is how this information will help us. So a lot of people will be afraid of the idea, thinking managerial accounting would be so complex. But in my opinion, most of us, no matter where we have worked in our own company or a smaller company or even in charity company, we all have been involved in managerial accounting one way or other. So people will ask question, how I didn't get involved, I didn't work in accounts. No, it's not to work in accounts basically, because we collect data. Bookkeeping job is to collect data. Then we organize the data. Then this data, when it's organized, then it's basically recorded and sent to managerial reports and financial reports and bookkeeping, other reports as well. So this is how everyone has been involved. Are they collecting data or maybe organizing data in one way or other? So managerial accounting data is designed to share with outsiders of the company who will be start thinking, is this company worth investing in future? Is the company's growth going up and down? If growth is going upwards, then of course they will be trying to invest money in the business. They like to be part of the success. If the business was not doing so well, then people who are in the business as well, they like to sell the shares and walk away from it. Yeah, this is how this information is used. So, interesting fact about managerial accounting is if it's used properly, this can be used as a competitive tool. Okay, so this can really take your company ahead. It can give your company a competitive edge as compared to competitors in the marketplace. Okay, because it can also tell us, not only that income we're going to get, our income we're making, it also can tell us how much cost it will cost us to run the business, to run the company. Yeah. To explain the competitive tool bit of managerial accounting, I'll just go through one example here. Let's imagine we got two grocery stores, grocery store number 1 and grocery store number 2. These both stores are, let's say, in the same street, opposite each other. So accessibility to get there, either by car, by train, etc., by walking, is exactly the same. They got same locations. For argument's sake, let's say when we go inside, we find exactly the same kind of infrastructure, the shelving, the ambience, the store, the stock. They buy from similar suppliers, so they got same quality of food available to sell. So there's nothing different from each other, apart from, when we come to that, is the bookkeeping style. Grocery store number 1 offers a very traditional bookkeeping. That basically means that they are only interested in paying the bills, paying the suppliers, and basically paying the stuff. That's all. But on the other hand, grocery store number 2, they like to keep the track. They like to keep the data tracked. They like to make sure that whatever they're doing, they keep an eye on that. For example, they would be using ABC, or what you call it, ABC costing or activity-based costing. That every single activity takes place, transaction takes place, every single thing they buy from a supplier. So when this item leaves from the supplier and goes to delivery process and come to the loading bay, they know exactly how much it costs. The actual basic price of it, delivery cost, and the manhandling process, and when it goes to storage, they know exactly how much each and every item they have is going to cost them. Because they got really sophisticated accounting system, they can keep track of the sales on each day. For example, they will know how much they sold at 12 p.m. or 5 p.m. this evening or 8 p.m. this evening. So they can keep track. Plus, they would have a loyalty card system like we have Tesco's. If you go to Tesco's offer a Tesco club card system. So when you go to checkout, you offer your club card to scan your points there, how much you spend. So as Tesco, their logo, they know their mission statement is every little helps. So every time we scan our Tesco club card, it sort of gives us some points. So interestingly, Tesco points, they are really good, because I once needed some insurance and I had lots of Tesco points, and that insurance was almost 60% discounted because of Tesco club points. Tesco points are also used maybe in airlines. They can be used in hotels and theme parks and stuff, in restaurants. So this company at grocery store number 2, they got similar loyalty cards points. So every time customer checks out, they scan their loyalty card, and it gives them an idea of what their spending power is, what age group they are, etc. So they can also see from loyalty card how much each person is spending. What they order every time they come, what they order and what they spend. Okay, so grocery store 1, this store basically what they have, they their accounting is based on, like we call it, meat and potato style accounting. Very simple. They only want to pay the bills to suppliers and pay the staff wages. They're not bothered about accounting. They just want to make sure their sales are up, they buy from this and that. For the second stores, grocery store number 2, their management team knows the managerial accounting is a competitive tool, and they like to use it in the same way. Okay, so this team in grocery store number 2, the accounting system is sophisticated, and they try to gather the data from bookkeeping, and then they organize the data, and this data is used in different functions through managerial accounting, and that's how they get information about their customers, about their costs and everything. So grocery store number 2 staff, they know itemized costs of each and every item they buy and sell. Okay, so they would basically know from the shelves how much each and every item is there, when they need to buy another one, because they would have an item up-to-date stock system as well. Every time something sells from the till, it sends the information to the warehouse or maybe the stock room that these items are less now, so they know when to order the next one in line. So because of the activity-based costing, they can offer customers 20 to 30% discount, because they know exactly how much they can sell each item after even making some profits. So because if you don't know how much it's going to cost you, you can't really think of how much profit you can make. So this will help them. This helps them basically to make sure they keep track of their costs, and they can still make profit, but also keep the customer happy. Okay, they know what people will buy because they have the loyalty points. They offer loyalty points, and customers will give them information in terms, basically against getting some points. The customer will get information on what they're buying on a regular basis. Okay, so it makes easy for them to target promotions for each customer. If let's say, Dr. Steve, you go for grocery shopping and you always buy pasteurized milk instead of skim milk, so grocery store 2 will know that Mr. Steve comes in and he always buys pasteurized milk. So they will give you information or quotations or promotions on pasteurized milk only. If I go to the same shop and I always buy the vanilla ice cream, they know the vanilla ice cream is my favorite, so they will send me promotions as per that. So these systems basically, they can make the company really, really clever. It's kind of artificial intelligence, which helps them a lot. Because the system in grocery store 2 is very nice. People know, they can basically they know exactly they know how, because they know the sales on daily basis, how much, because they will have forecasts of each week. They know exactly what days of the week are really busy for them, what days are really quiet for them. They can even they can even keep the stuff accordingly. Let's say from looking at the UK, or Ireland point of view, here Monday the shopping centers are usually very, very quiet because everyone goes to work. Tuesday, Wednesday will also be quiet. Thursday becomes busier because Thursday evening is a long evening, a long day for everyone. Most shops will close at 9 p.m. So they can have extra staff. Saturday usually is very, very busy for every shop or every business because people are free. Sunday is not, although it's weekend day, but it's not that busy because sometimes people will be worried about going back to work the following day. So if this company, grocery store 2, they know that's what their busy days are, they can put extra staff. They can get extra stock as well when it's going to be busy for them. Let's say they sell 9 bottles of milk, big but 4-gallon bottle of milk on every day, but then on Saturday they might be selling 25 or 30. So they can stock as per their busy days because of the information they get. They can also stuff the store as well as per their busy days and quiet days. And they also know the demographics, and these demographics will help them to send promotions to the customers as per their taste, as per their sort of age group, as per their spending powers. All right. So this effort here, trying to basically sell the customers promotions, etc. This might look like maybe we're doing advertising and marketing here, but no. I think if you look carefully, this advertising and marketing stands behind a very good, sophisticated bookkeeping system. If we didn't have bookkeeping in place, we would not be able to gather this information in first place. Okay, so managerial accounting system and the data behind it, it makes it possible for us to target each and every customer we have in a store. All right. So another question arises: Grocery Store 2 was equipped with sophisticated accounting system, and Grocery Store 1 was a simple accounting system. So which one would be winner? Which one will be winning more revenue from other? Which one can make more money? Although we thought initially, they both are in the same location, the infrastructure is exactly the same, MAS in store is exactly the same, equipment, shelves, everything is exactly the same. But in my opinion, Grocery Store 2 will do a lot better because they know the customer really better. They know what customer choices are. They have a lot more information about the customers than Grocery Store 1 has. So I think Grocery Store 2 will be a winner here. They will be able to use managerial accounting as a competitive tool. Okay. All right. Now, next we can discuss how managerial accounting data is used. I'll go through a few headings, but also explain every heading with an example. For example, let's talk first of all is product cost. When it comes to product cost, let's say we have a furniture store in our neighborhood, and we know the furniture store owner or shopkeeper there. Let's say one day a customer walks into the store. A customer says to shopkeeper, "I'd like to get a customized oak table made." Of course, the next step will be for shopkeeper to give him estimate. If the shopkeeper can only give us intelligent estimate if he knows exactly how much it's going to cost him, how much the customized table or specifications are going to cost him. If you can define that, he can give a really good, reasonable estimate, which can also be acceptable to the customer and is also profitable for him. So that's why I will say product cost is part of managerial accounting. The next one is break-even analysis. Let's say we're opening a beauty shop near the shopping center, near our home. Before we open the beauty shop, let's say beauty therapy, we need to understand what the costs are involved. What are the costs involved to open the shop, to rent it, maybe lease it, the equipment to buy for it, and then how much the staff will cost, and the taxation, the government rates, everything. What's going to cost us every month? Equipment, raw materials, everything we need to buy, inventory. Once we work through all the costs we have, then we need to work out, okay, these are the costs for us every month. So we need to sort of see exactly what's the selling price for each beauty treatment. We need to also work out how many customers we need to serve to make that kind of money, which will be equal to our expenses. So at this stage, we're not making any profit, we're not making any loss. This is called break-even, when our revenue equals our expenses. This is break-even analysis. Okay. So we need to figure out how many customers would you serve. So we need to do, of course, some calculations. Calculations of how much each customer, how much we're going to charge each customer. We need to set a selling price for each treatment. So we need to work out exactly how many treatments we need to do. We can sort of relax if we achieved it. Some business can take longer than others to set up basically their break-even analysis. So see, a friend of mine, Tasir Qureshi, he had left his chartered accountancy, but he started his own practice in Wilson Green in London. It took his business, I think, 18 months to break even. And then he's really happy because they're doing really great now, but it took 18 months. So it depends on how long it takes. We need to work out exactly how long it'll take us to do our break even. So this break even is also an important part of managerial accounting analysis. Next one is budgeting. Budgeting is very, very crucial part of any business. Most businesses, small businesses, fail because they don't do budgeting for themselves. Budgeting basically is a numerical plan on paper. We write down exactly what our income is and how much we're going to spend from that income. And we sort of look at the income, first of all, minus all the expenses, and we know exactly how much we're left with. If we have not prepared a budget, we will not be able to keep track on where we're going, how much we're spending, how much we have in hand. So this way, most businesses who fail because they don't keep budget in hand. So that's why budgeting is also a very important part of managerial accounting. And next one is performance evaluation. Performance evaluation, I think, is done in lots of multinationals, and no matter where you are, even in India, Pakistan, they will have performance evaluation, or we can call it performance appraisal. So a lot of employers, they would like to see which employees are doing better. So through performance appraisal, they will be able to see are they doing the job properly? Are they really doing much better than others? So should they sort of reward everyone at the same price, or should they reward people who are doing a lot better? I think common sense says, that they should reward people who are doing a lot better than others, so that other people can be motivated. Performance appraisals, some companies might have schemes like, employee of the month award, or maybe employee of the quarter award, employee of the year award. So when they have employee of the year award, or quarter award, employee of the month award, they would have different sort of rewards for it. Somebody could get some monetary value, or £100 cash, £200 cash. Some might even get a holiday in Caribbean with a spouse on. So with this kind of performance valuation and rewards, staff will be motivated. It'll also motivate other staff as well who are there. So that's why we need to do some calculations, gather some data to evaluate different parts of our business. These are also part of managerial accounting. Next one is investing in long-term projects. Long-term projects, we cannot always get 100% figure right, but of course, if we use managerial accounting data, we can get very close to it. We can get very close to accuracy. For example, let's say we're going to open a new factory in Oxford, which will last for 25 years, because each project, every time we open a factory, factories cannot last forever. In the UK, we have cities like, let's say Leicester, we got Manchester, Birmingham, Huddersfield, Coventry. These all cities were factory cities. When people came from India, Pakistan, people who didn't have education at the time, a lot of people came from Mirpur when the dam was made, in Mangala Dam was made. So British government said, they sort of fine, we'll accept these people, let them have, because British companies were making the dam at the time. So a lot of people were given visas to come here, and they had no education, so they could only get a job in a factory. So those factories, were there. A lot of people got jobs there, but those factories have disappeared now. I can't see any of those factories anymore. Manufacturing business in UK is almost finished. It's almost next to none. When I first came here in late 80s, at that time, we were making lots of cars there, Hondas, Hyundais, and BMWs and Rover and so and so. But no, most of the plants have gone out. Gone out of the country. None of them is here. Okay, so let's say this factory was going to last for 25 years. We need to make a decision. This decision will require how to use managerial accounting information to work out the cost to buy the land, first of all, build the building, to buy the equipment and machinery, the plants for the factory, whatever we have, and when we'll make profits. Let's see, when will be our break-even analysis, break-even point there. How long the business will last? All this data will be gathered in order to make a decision. And should we start the business in this location, or maybe should we go for a different location? Okay. Next one part of managerial accounting data used is outsourcing production. There was a time that a lot of things were made in European countries, but then they realized that there are some cheaper markets in the world, so they didn't mind traveling. When a few years ago, I think back in 2001, when I joined Norwich Union. Norwich Union is the biggest insurance company in the UK. They are known as Aviva now. They were Norwich Union before, and they were number 6 in the world at the time. So basically, I was working for Giorgio Armani in London, and went to work in Norwich Union. In Norwich Union, there were only few foreigners there, and those foreigners were from India. They looked like from either Hyderabad or Ahmedabad, I think. So I saw 8-9 people in the market, in the town center, when I went to eat food. Next day, when I went to work in the office in Aviva, those people were working there as well. They were IT people there. They were doing outsourcing business for Aviva. I can give another example. Let's say some hotels, in the early 90s, they all had their laundry rooms in the hotels. That means each time the customer has used their bed sheets, their pillow, their towels, and their handkerchiefs, etc., they were all washed in the hotel. So each hotel will have a big plant to set up laundry plant. There are like 4 or 5 people working there. They will have lots of big trolleys, to put dirty laundry in there, and they have lots of heat in there. Lots of electricity will be used. Lots of gas will be used, and then lots of sheets will be ironed and all that. So they will have lots of stuff working there full time. They have to pay the staff holidays and everything. They have to pay all the costs as well. Buy new sort of laundry, then keep washing it, keep ironing it, and sending it back to the rooms. And then I think we had some companies who came into business, and these companies realized that they can make laundry plants and supply fresh laundry to lots of hotels. Let's say their production capacity was 1,000 towels. One machine could clean 1,000 towels. So for them to clean 100 towels or 1,000 towels, the cost is the same. So hotels also realize, that we're getting a lot cheaper from these people. Instead of, we can close in our laundry room, buy the stock from them, and rent it or lease it out. So if something goes wrong, you send it back. So your job in the hotel will be to put dirty laundry into bags outside, and this company will send a truck next day. They deliver the fresh laundry, fresh bed sheets, pillows, pillowcases, etc., fresh towels, and take the dirty ones away. So this was working a lot cheaper for them. So if we have, let's say, a factory in Birmingham, we can see, can we maybe open other can we outsource this in other countries like Bangladesh, India, Thailand, China, where it's going to be cheaper? So we can make this kind of decision through managerial accounting, because when we get information, what's more profitable for us? Is it profitable for us to be here, or is it profitable for us to outsource information from someone else? Most companies these days, they usually outsource their payroll in accounting function, because otherwise you will have to hire. If company is bigger, they need to hire 2 or 3 people in the business. You have to pay their wages, they have to pay their holidays, etc. Then you have to buy lots of equipment. So a company outside the country, they might charge maybe 1/10 of the price of the same payroll cost. So you say all you need to is send them.
Yeah, like you were sorry to interrupt. Like you were saying about the factories, the cost of production has raised over the period of the time, and when you add up the rents, the rates or council taxes in the case of United Kingdom, as well as the minimum hour wage rates there, and then the direct and indirect costs there, it's quite profitable to get it from the third world countries, especially like in the case of drapery or outfits in Bangladesh, India, and Pakistan, and the case of electronics, China. Same is the case with, I think so, with the outsourcing of the services, like you were saying about the wages, the counting packages. There are a lot of firms who will take about 20 clients or 30 clients and then all together, and will process the wages for the small and medium term sort of companies there.
Of course,
It makes
you're right.
more
And then
sense.
next one is about adding a product line. So we can see, let's say if you have a factory in Dublin and you make children clothes. So from managerial accounting, you can also identify, can you also add another line? Can you also maybe start making adult clothes? Should that be women only, or should that be women and men clothes as well? This can all be done, through some calculation of figures, here and there. Get data from other competitors who are doing adult clothing and see, is it profitable in this area? Is this area good for this kind of clothes? Or do we have a lot of families living here? If families living there, there'll be adults in the house, also kids in the house. If it's only schools nearby, then we need to sell more uniforms. So this kind of information can all be achieved through managerial accounting. All right. Okay. Next topic is accounting setup books. Usually, multinationals, they will have different setup books. The setup books, basically, they sort of range from 2 to 5 setup books. I mean, I'm not going to say, that I'm talking about as cooking the books. Cooking books will be totally illegal. Although I still remember when I worked in a different country before I came to UK, a third world country, where we had different set of books in meaning, literally we had different set of books. One set of books was for owners, and one set of books was for the government, which we had to report. Basically, let's say the hotels, we had triple rooms and double rooms and suites. So every time you have restaurant business as well, restaurant will have to pay sales tax per person served in the restaurant, per person stayed in the hotel bedroom. So in the triple room, they will show to government single occupancy, but they sell triple occupancy. Triple occupancy will go to the owners, how much money is actually made, and single occupancy will go to the government, how much money they were supposed to make in sort of in terms. I'm not saying that in West everything is perfect. It's not perfect, but it's not as bad as several countries. Here, here also there's some some things are out of practice here, but here mostly things are in the loop here. Okay, in fact, large organizations will use 3 set of books, generally speaking. But all 3 set of books, they are based basically on bookkeeping system. because bookkeeping system collects all the data, and then this data is actually used to make these set of books. It could be, first set of books will be financial reporting books. These set of books are prepared, are designed in such a way that information should be given to people outside the business. These are potential investors or even suppliers. These people, they like to keep an eye on us. Make sure that we are still in good health of business. Business is profitable, is growing. Okay, all right. And then second set of books will be, second set of books is about what call it tax reports. Tax reporting is basically for government only. We can see government can see from our figures how much money we made and how much we need to pay them. So this is only to comply with the law compliance only. The purpose of two different reporting, for example, financial reporting was for people outside the business. We had declared some kind of income, which that income is not going to be same as tax income. Tax income will usually be very different, because let's say we in a business, we made £500,000 last year, and £500,000 was sort of let's say reported in financial reporting, financial accounting, that we made £500,000, £500,000 in a year. But then we didn't take into account some bad debts in accounts. Some companies will be new companies in business. We give them some credit to pay us back later on. We send invoices, but they fail to pay us. If they fail to pay us, that means we could lose £20,000 to £30,000 in the year, because that money will never come back to us. So we cannot report. We can only report taxable income, taxable reporting, which is actual income, actual money which we can receive, not the one which we can sort of focus initially that we're going to make. That's why the two different set of books, but they have different purposes. We cannot report exactly same financial accounting income which we thought initially. Okay, so let's see. Financial reports are prepared to give economic information to potential lenders or investors. That's their purpose. Yeah, their purpose is to give investors information that we are healthy in business, we're growing, we keep making profits. At the same time, tax reports are merely designed to satisfy the law, satisfy the government, that we are there, we're making money, and they can expect certain amount of money every time. That's why we send, our tax returns, or VAT returns or VAT returns, because when you send VAT returns, government knows that these are VAT returns, and then we can pay them later on. So VAT returns are submitted. We don't have to send money straight away. We can submit VAT returns, but pay the money when we actually collect the rent, collect the money. So there are two different purposes for two different sets of books. For example, the third set of book is internal managerial reports, which is different to other tax accounting or financial accounting. Okay, now this is the fourth point, which will be the last topic for today. Basically, this is income tax reporting. Last week we discussed bookkeeping, and we talked about financial reporting, and today we talk about managerial accounting, and the fourth topic now is income tax reporting. You should look at the picture here and diagram there. On the top, we got four different sets of of income there. First of all is income, economic income. Then we got accounting income. Then on the right hand side, we got taxable income, and finally on the right side, we got the cash flow. Under the economic income, there's a cross there. Under the cross, we got 2 bullet points: value changes, and we got subjective. Under accounting income, we got under the cross accruals, and taxable income, we got under the cross reduced arguments, ability to pay, and social tinkering. Under cash flow cross, we have objective and cash flow. I'll go through all of them one by one. I just want to text paste the diagram so people can remember the diagram. I'll be referring back to it in sort of meanwhile when we explain everything. So let's take the first one, which is economic income. Economic income is based on the value changes. How much we are worth, how much the business is worth, how much my car is worth, how much my house is worth. In our Asian communities, as if you will agree that we keep assessing each other. When some guests come to the house for the first time, we like to look at this car. What car is he driving? Okay, what's the model of the car? Does the leather seats, a sat nav or something? And sometimes if you're too curious, you might even ask them, what year is your car? What's the mileage, to get exact information? And if we go to someone's home, we ask them, is this house semi-detached? Is it a detached house? How many bedrooms do we have? We know exactly what area they live in. We can assess, we can estimate, what's the worth of the house. How much this person is worth, altogether. Similarly, for a business, economic income can sort of work out the worth of a business. which is very subjective. It's subjective because of economic conditions. Sometimes, let's say the value changes, of the house. Sometimes inflation rate goes up and down. Sometimes exchange rate goes up and down. I bought a plot in Bahria Town, Islamabad, in 2007. So a few years ago, it was doing, I think, 50 lakh rupees. And then I think now it's gone down. But no, I might say it did lose a lot of value in rupees. But if I compare with pounds, no, I've lost value because no, 1 pound equals 220 rupees. So basically, if you look at that, it's not really that much worth as it was before. So economic income is subjective. It's there as a guideline, like a budget we have. Okay, so it can really guide us in a certain way, but it's very subjective. Next one is accounting income, which is on the right hand side from economic income. Accounting income basically is in between taxable income. So accounting income and taxable income are in between economic income and cash flow. Cash flow is on the right hand side, and accounting accounting income economic income is left hand side. So let's start the diagram again. Try to sort of imagine we have economic income, then we got taxable income, then we got taxable income, and we got the cash flow. So accounting income is in between. Accounting taxable income are in between economic income and cash flow. Accounting income basically will try its best to make sure it reaches as close to the economic income, because we get a forecast, we get a budget, how much money we're going to make. So basically, we need to make sure we work very hard to produce that kind of income. And when we talk about accounting income, this is all based on accrual system. We don't always get exact information. Let's take example of utility bills. Like UK and Ireland as well, utility bills are not sent every month; they're sent every second month. So let's say we're running a business on calendar basis, yearly basis. That means for gas, electricity, we'll only get 6 bills, not 12 bills. So let's say we're doing February accounting in month of March. In early March, we start doing accounts. So we only got bill the month of February, which is for 2 months basically. But we didn't post anything in month of January. So if we don't post all the bills in each month when the bill was supposed to arrive but didn't arrive, it arrived the second day, our profit and loss figure will be up and down. It'll be just fluctuating up and down. And companies prefer straight line income report. They like to see exactly income should be in straight line. It should not be up and down. That's why we post some expenses. Let's say for gas, everything gas bill was £400 in month of February. Last year month of February was £400 for 2 months, and then we know roughly estimated it's for £200 per month. We might think, okay, maybe it could be maybe 190. It could be 220 because January was still very cold. So we can post approximate expenses, which are called accrual expenses. So when actual bill comes, we only reverse the month of January because that month we didn't get the right bill. We reverse that and post actual bill. So in this stage, monthly date bill will be exactly fine. We're not posting more money there. We're only posting what really happened. So similarly, accounting income as well, which comes to accrual income, we keep recording in such a way that we don't sort of go above it. Okay. Let me give you an example of how it works really when we say accrual income. Okay, let's say my business is called Soft Skill Experts. Soft Skill Experts, I do training in Middle East, Europe, in UK. So basically, let's say from that source only, I would have made, let's say, £45,000 last year. But I don't get cash in hand. Always when training is finished after 5 days, okay, they don't give me cash. Okay, thank you, Mr. Kazmi. You came there. Here's the money for 5 days. There you go. Bye-bye. I send them invoice when I can't get back here. They look invoice, they check everything, what the quotation was initially, what we agreed on daily rate. And then invoice it goes to the finance department, it approves up. Then they send payment in maybe, let's say, month, 2 months, 3 months. Sometimes some companies take even longer. Let's say, for argument's sake, I made money this year. I had the revenue this year, but I didn't collect the money this year. Money came to me the following year. So should we report the income when it comes to income tax reporting this year, or should we report income tax reporting the following year? The right answer would be, we should only report the taxable income tax reporting when we get the money in hand, not when we have accrued the income. Okay, when we have accounting income, basically, income accounting, idea of accounting income is accrual income is not to follow the cash, but to follow the money. Follow the effort, follow the creation of economic value. So when we talk about accounting income, we had to report it when the transaction has taken place. Let's say I delivered a training course in Oman. I went to Sohar. After 5 days, I created invoice. Invoice was sent to them. Invoice actually was also created in my accounting system. So that revenue was generated. That revenue, I have earned that revenue. I have not earned the money yet, but I have earned the revenue. So when it comes to accounting income, this income has gone there, but it hasn't gone still into taxable income. Taxable income will be only achieved when I get the money for it. Yeah, I think it'll be more clear when, of course, when they look at the video once or twice, go through slides again, they will understand what I'm talking about. It might be a bit harder. I think last week was a lot easier to understand, but this one we're getting into more sort of nitty-gritty, going to deeper and slowly. Okay. All right. So basically, just to go through the same example, accounting records, financial accounting, for example, report the income tax this year. When we actually did the work, this marks towards the economic side of the things. When we did the work, because accounting income is close to economic income, so it's very subjective. If we don't get all the money, if I didn't get the training fees all together, let's say I did 2 training courses for them in 1 month, they only paid me for 1. And when before they could pay the second one, company went out of business. That means I cannot report that income to taxable income because I didn't get all the income back. But when as far as is concerned in accounting income is there because transaction had taken place, then it would be adjusted. Before we do our year end, it will be adjusted definitely. Then we had to actually report what we really got the money. But on the other hand, did we create the value this year? That's just when we are going to report the income. Value was created. That value will be reported into accounting income, but it will be only reported into taxable income when money is received. Okay, next one is taxable income. On the other hand, taxable income is towards the cash flow side. When we look at the picture again, we had economic income first, then we had taxable income, then we had taxable income. Sorry, let's start again. We had economic income, accounting income, taxable income, then cash flow. So taxable income is very close to cash flow. That means if it's towards a cash flow, under cash flow, under cross, we had a bullet point called objective. But on the economic income, we had bullet point called subjective. Why I would say taxable income will be more objective? Because when we receive the cash is physical in our hand or in our bank accounts. We can see it's become tangible. We can see it. We can feel it. We can spend it. So we should only pay the tax when we have the money. Even the governments are very sort of flexible. They will not ask you to pay the tax as soon as you have the income. As soon as you declare income, they will only give you time up to a year, sometimes more than a year as well. If you're late, you pay a little penalty, but you still pay taxes after a year when you have to receive the money actually. So at that time, if some money has not come through, some money has diverted, you report accordingly that this money, we didn't receive it. Okay, and then, of course, but at the end of the day, we need to obey the law. We need to follow the law. We need to pay as much we owe. And by measuring subjective economic value, it's hard to tell who's right or wrong because, if we are talking about accounting income here, which is close to sort of, economic income, is subjective. So we cannot see how much money we're going to get, although we had revenue there. I worked for a facility management company in Dublin to see if it was they're based in close to Dublin too. So when I went to work for them as financial controller, they had lots of work in progress. Work in progress basically is like they had income there, which was reported there. This is our income. This was showing as their. If you look at the balance sheet, it was showing the balance sheet as accounts receivable. They're going to recover it. So I kept telling, look, guys, I need to see this income. Where the income is? Where's the proof? Where the invoices? And they're going to show me. There's no way. It's there, but no one was prepared to show it. I keep saying to them, look, guys, if you don't prove it to me, that means then I'm not going to believe it. Neither the taxman will believe it. Neither sort of your investor will believe it. Because they had lots of tax income which was showing as work in progress, which is showing as accounts receivable, but there was no proof behind it. So eventually the company, they had receivers come in, walk in there, and company went into liquidation because they could not. They said maybe they were inflating the income. Maybe they had done it. Maybe in Ireland at that time, maybe things have changed. Everything was done in the head. Paperwork was non-existent. No thing was done. Okay, I know this guy, and then nothing was recorded. So I think that could be very dangerous if we don't sort of keep proper measures. But whereas the cash flow is straightforward, it reduces arguments. We have the money. Where's the money? In my pocket. Okay, when they say, show me the money. Where's the money? Show me the money. When we can show the money, it's all in black and white. Okay, so basically, it's easier to obey the law because when we have the money, it's all in black and white. We can show from taxable income, money is there. Here's the money. Is this what we got? And this is what we're going to pay. So when tax inspector comes to see the place, they can see, yes, this was the money. They see the money. This was the taxable income, and just they paid for it. So depending on the taxable tax rates, for example, Ireland was cheapest in corporation taxes. That's why a lot of companies.
Still it's cheaper.
Yes. I think it was 12.5%. Is it still the same price?
It's still the same there it's cheapest in EU.
Cheapest EU. So that's why lots of companies, they would have they'll be working like Amazon or eBay or everybody else will be working all over Europe, but they flush their income through Ireland to save the taxes because some countries charge 40% corporation tax.
Yeah.
Okay. So I earned the income this year, but I can't pay the tax until I'm able to collect the cash. That's basically taxable income is all about. It's logical to wait till the next year, pay the tax when I have collected the cash. This is another way of area behind taxable income. We only pay when we get the money. So next one is the bullet point which we had under the taxable income was social tinkering. Tinkering basically, I suppose, means when we do bits and pieces of things at a time, instead of doing all in one go, we do a little bit pieces and we get the work done. It makes the tax rules more complex in many countries. Why? Because let's say somebody owns a house on mortgage. When you have the mortgage, you get some tax relief. So you need to tell the Inland Revenue or Revenue House or tax inspectors, I have a mortgage, and they will give you a new tax code. And the tax code will basically, the new tax code will save you some money. It will give you some relief of income or some tax reduction in your tax because you have a mortgage. Because the governments, they encourage people to buy their own homes. Similarly, when a company will invest in charity, when a company will invest some community projects, what happens when we have a business to see we make money from the community? We sell our products and services to the community.
Yeah.
But if we give something back in return for some community products, let's say somebody has opened a library, somebody opened a little college or school somewhere, these come under in corporate social responsibility, or we call it CSR.
CSR, yeah.
A business, basically a new business, for example, or new investor will think which company are CSR companies. Which companies have policy of corporate social responsibility? Because they think if they're being socially responsible to public community, they'll also be socially responsible to us as well as investors. So they become more sort of ethical in the eyes of investors. Okay? So here we have see the difference here in accounting income and taxable income. As accounting income is a bit of economic measure because it's like a budget. We have budget income, how much income we will receive. But on the other hand, taxable income is more objective because then it goes through cash flow. We can see exactly how much money we actually are going to get. Income tax accounting is all about obeying the law. Whatever the law says, we should pay for it. Law does not say we should pay more than we owe them, and definitely we cannot pay less than what we owe because then that will become illegal. So we should pay exactly what we owe. And taxes are not basically enforced. Taxes are not voluntary. They are enforced exactions. So they are not voluntary contributions. So we should pay exactly what we owe them. So this is the end of the session today. As any questions, somebody has to ask any questions?
This is all about saying people different, nice, but I think so. The whole presentation was a bit tough to observe in a one go, but that's all about accounting. It's nothing rocket science there. It's just that what we do it in a normal practice is just to observe it, like it's a follow the law thing, follow your instinct there, do the right things. I think so. The difference, which let me explain my point of view here before we conclude, Rahat Sahab, is that in Asian community, it's kind of, we don't take accounting as a serious process. I always say accounting is a process. It's not a subject there. And once you take this accounting as a serious process, then Rahat went through different slides in episode 1 or series 1, and now today in a series 2, there's a lot of things you could help yourself inside the business. Like the numbers have a strength, and once you have those numbers, or in other words, once you have that data, you could utilize that data for your own benefit there, to say what is working for you and what is not working for you, and then take up a positive out of those whole data. But if you haven't done your accounting practices, and your accounting practices, whether you're a small firm, whether it's a one-man firm, or whether it's a 500 people firm there, I think so Asian people from the Asian background, they don't take it quite seriously. Correct me if I'm wrong, Rahat sir.
In my opinion, I agree with the Asian side, but I think it's not only Asians. So it's also everyone, even English, even Irish. Like, we had a quotation in I think in India or Pakistan, I know Delhi Duras. So I think it's just that, Delhi is too far away. Similarly, when it comes to accounting, not many companies like to spend money in accounting. I saw the same trend in Ireland. I see same trend in UK as well. Most companies, they spend more money on marketing and sales. They think, sales are less important. I always had arguments with salespeople when I was working as financial controller or group accountant or group controller. I would tell my salespeople, it's rather you sell £5 and we know that we're going to get the money back, instead of selling £5,000, you never see the bills. Because sale is never complete until you collect the money.
That's correct.
So that's why we need to make sure that we have, this course basically is not designed for accountants. I said before, is accounting fundamentals. So if you are head of the company, you could be director of a company, you could be owner of the company, you could be entrepreneur who like to start the business. You need to understand these things. These are simple terms which will make you aware of what's going on around you, and then you can maybe understand things a lot better than before. So if you are maybe, a lot of companies, they sort of send people in Middle East, some engineers, they will come to work in finance, so they can understand their estimates, because every time an engineer is working in project management, they need to understand the figures and costs involved. If you don't understand, what's the costs are like, how can you work with the costs, you can really not get the job done properly. So this is basic information. I know it went a bit dry at some stage, because at the end of the day, we discussed in first lecture, we talked about type of accounting. Type of accounting was 4, in my opinion. They were bookkeeping, they were financial accounting, which we covered last time, and today we covered about we call it managerial accounting and taxable accounting. So I just had to go through exactly what taxable accounting was and what managerial accounting was. In the next session, third session, we'll go into more detail of financial reporting. Financial reporting will have the balance sheet, will have the income statement, and what the cash flow report. So we'll go through that in the next time, hopefully.
Sure.
So
tell me, before we conclude this live stream, for the young people or young students who want to start in their life of as an accountant, or take a career as an accountant, what is your message for them?
In my opinion, look, first of all, let me tell you a small story. Actually, I didn't plan to work in accounting. I basically, initially, when I was in college in Pakistan, I was doing pre-medical, then I wanted to become a doctor, but then the way in Pakistan you can do 1 or 2 attempts, I didn't achieve the required results. So I thought, okay, fine, let's do BSc. I had read biology in FSC, but then I went to do BSc in mathematics. So I double maths and stats in BSc.
That was quite popular at that time.
Yeah, quite popular. So at that time, because at that time in our age, at that time I wanted to BSc in mathematics. So our teacher who was teaching us mathematics, he had a very dry sense of humor, maybe worse than even Irish sense of humor. He said to us, anybody who had not studied biology, raise your hands. It was four or five of us and we raised hand. He said, okay, guys, consider your sex has changed. You have been reading girls' subject before. Now you're going to learn the boys' subject. With biology, you can sit in the bed, put the quilt on top, and you can study it. But mathematics, you have to sit on chair and table. That's and you can keep practicing, otherwise you can't do it.
Yeah.
So when it comes to I think accounting, actually, basically, I was when I worked in hotels in UK, I was working in operations, and one day my GM said to me, "Raj, I need your help tomorrow in accounts department." So at that time, I actually was doing my MBA, but I had not decided where to specialize. I was thinking of doing maybe specialization from Leicester University, either in strategy or maybe something else, CRM or something. But then when I went to finance, I said, okay, no, hold on. I'm in finance now. Let's do accounting specialist in corporate finance. So my style changed. And because of that, I selected financial subjects. Before that, I didn't have any financial background. So finance wasn't that difficult.
Mm-hmm.
I did my, let's say, last assignments, 4 assignments in 12 days.
Mm-hmm.
I was working with Giorgio Armani. I only had 12 days given to me. My first 2 assignments were corporate finance, and second assignment was strategic financial management. Then I have to do my thesis, 15,000 words thesis proposal, and thesis as well, all in 12 days.
Mm-hmm.
So all of them, through my hard work, I got A in all of them. So I had basically passed my MBA with distinction at the time. So it's not basically hard. Accounting is not hard. It's basically you need to sort of practice. If you keep practicing accounting, you become more logical, think logically, and then it's all easy peasy. It's not that hard, honestly.
All right.
So I think anyone
basically, it's a simple message for any discipline is to work hard and have an aptitude for that.
You should keep your open mind and you keep thinking logically. Accounting is all about logical thinking. That's all.
All right. Thank you very much for today live stream there. We'll see you next Friday, same time, 6 Greenwich Mean Time and 10 Pakistan Standard Time there. If you have any questions, please leave it into the comments there, and I will request Mr. Rahat to answer your question, whether it's related to accountancy, whether it's related to the accountancy career, anything in relation to that. You're more than welcome to ask any questions there. Have a nice day, and we'll see you next Friday, same time there.
Okay, take care, everyone. Thanks, Asir Bhai. Thank you for having me there.
Thank you.
Thank you.